Welcome back to another episode of the Anatomy of the Trade. Today we're going to do a market update, or specifically we're going to talk about gold and silver and gold mining stocks, just because there were a lot of interesting moves just lately and we want to analyze those. I've been announcing this for quite some time. Tape reading course is just, has such a great following right now as a course, so just want to promote it a little bit more for those of you who are interested. Go check out some of the free videos that we have on YouTube channel where I'm just going into tape reading. I did one with Franz in the Anatomy of the Trade. I did one with Bruce just recently again. So check those out. It's a craft and the skill that is being lost by a technical analysis community, and I think it's almost like a preservation effort for us to go do something like this. All right, well, Franz, let's just dive right into it and let's look at gold. So what do you see here in this first look?
I see a very nice up channel that back in July we overthrew, got a little bit overbought, have been pulling back from the supply line of the uptrend channel, and now we are bouncing against the demand line of the uptrend channel and really haven't been able to break it in what looks like a trading range with a slightly downsloping character to it. So that's kind of the evolution, at least since the last move, the last rally that we've had significantly. Mm-hmm. Does that make sense to you?
Well, yeah, absolutely. I mean, these are good observations. So let's go a little bit deeper. I mean, like when you guys look at the chart, you definitely could extract a lot of information. So for instance, this type of the climactic action that we're seeing into the overbought condition in July, August, usually suggests more of, I'm not saying a terminal back buying climax, but more significant climactic action, which suggests that the trading range duration might increase relative to what? Well, maybe relative to what we've had before. So for instance, this rally right here, we're not going into the overbought condition. So look at the duration of this reaction. Look at the duration of the trading range that we're already in, so much more. So this is a little bit more significant. It's a little bit more pronounced in the way how the climactic action looks. Let's say if we would be comparing it to this area right here. There is more of the speculation where each day the price moves up, rather than here there are some stops on the way up, and on the and there is some selling on the way up, which stops the momentum, which decreases the momentum relative to what we've had before. So again, the same idea that the quality or the character of what precedes a trading range could also give you some kind of signs as to what to expect. So we are in the trading range. We are expecting that this trading range might actually last for a while. Okay, well, with that, let's go into a trading range and let's just look at the daily first. So here we are. Obviously, this bar right here is one of the most important bars. Actually, there are two most important bars in this structure. This one right here and this one right here. Franz, how would you interpret these two bars?
Well, they are both changes of behavior. The first one is a change of behavior that shows that we're going into a different environment. We're coming out of a rally and we're going to be going into some sort of a trading range. And the second one unless you want to expand on that thought some more.
No, go ahead.
Okay, the second one potentially could be, it's another change of behavior, and it potentially could be something that we refer to as a second point of fear. The second point of fear being that when the final supply that is available in weak hands is presented to the market, strong hands vacuum it up, and it results in kind of the what we call the phase C. Everybody's familiar with that. The phase C point in the range from which, if this is accumulation, from which the uptrend that's coming next evolves. Now, the other question could be, you know, is this distribution? And in that case, we do have a significant amount of selling off of the top of the range, which could also be open to some interpretation from a bearish point of view. In other words, you know, supply comes in and pushes price down quickly and aggressively from the top of the range back to the bottom. And this really is kind of the first time that we've seen supply coming in at the top of the resistance of this whole, you know, channel. If you look of this whole area going across, so that's kind of the way I'm looking at it. What do you think?
So the first bar as a change of behavior, Franz, what kind of result did it produce?
It was not able to, it went about halfway down into, a little bit more than halfway into the previous rally. So
okay,
that's kind of how the extent of it. It did have a wide spread. I mean, it showed aggressiveness, but there wasn't a whole lot of follow through. This is daily, so there wasn't a whole lot of follow through afterwards. So it indicated that initially, at least, there was definitely some perceived value at the low points that particular bar reached, and
okay.
buyers were able to come back in.
One of the ways for us to look at this is, what does this bar break, right? What kind of support levels does it break? It breaks like a local support level here. It breaks this level right here where there was just some stop in action. There was a little bit of the consolidation right here. So we kind of break in maybe like 2 or 3 support levels, and we're negating 1, 2, 3, 4, 5, 6, 7, 8, almost 9 bars, 9 closes. This is what we're negating. So it does produce that type of result, that type of damage where the latest climactic portion of the run is negated very quickly in 1 bar. Here, you know, on the second bar, we are 1, 2, 3, 4, 5, 6, 7 bars. And we are really not breaking too many support levels. I would say that maybe there's something right here in the middle of the range. We are definitely, you know, trying to break this one, so maybe 2. And then we stopped. So what's interesting is this stop in action. We stopped exactly at the level of the support. Why? Why are we doing this? Why was all of this increase in effort where before we kind of travel easily to the downside through multiple support levels? Here we stop at the support level. So that's a big question for us. Question number 1, I would say, to address. And I think with this question, you know, it's either from this, you know, a continuation to the downside that we're going to have, or we're going to test and then we're going to resume the rally. and that indeed would act as a second point of fear. So far, by what's going on, Franz, what would you say? Continuation or a test?
I'd say a test.
Yeah, so far it's a test. I mean,
We're seeing volume. I mean, we're seeing supply after the supply that came in on this bar, and some of that is obviously demand. So we haven't seen any. Yeah, it's diminishing. Demand as yet hasn't been able to, turn the thing around, but it is definitely preventing it from going down more. So
whatever demand showed up here on this bar, and we see that in this volume signature, it stopped the price from moving further down. So that's point number one. Point number two, it exhausted supply, and on this second down bar, we're not moving down. We are actually creating a higher low. So that's the result of the collision between demand and supply. And now we're holding here. And demand is still not showing, showing up as kind of like the force that would rally the price up. But it made its mark already. It stopped the price from moving further down. It exhausted supply to the point where the selling is less. So we just need to see what's going to happen next. So the key for the demand is to overcome the high of this bar right here, then to overcome 1/2 of this spread, and then kind of reside in this area right here. I wouldn't be anticipating, if demand is going to become in control, a rally that's going to be, an easy rally. After the emergence of the supply like this, usually, if we become more bullish, we go up, we go down, we go up, we go down, we go up, we go down. And then somewhere here, we start accelerating. And actually, the prior action was, somewhat bullish, right? And we've discussed it before. And this reaction here was much better than this one on diminishing supply characteristics, shortening of the thrust. Then we don't have any supply. Nothing is being, aggressively sold. We are retesting the low. We were thinking that at the time that this was phase C. Dynamic bar right here, which fails, but fails into the support again. So maybe this is just a shakeout on the news of the coronavirus, on the vaccine, and then there is a flight away from safety. Safety of the metals and gold in particular. So this would be a bullish scenario. A bearish scenario is much easier, right? So we're trying to attempt to go up and we're failing, and then we're just failing, and then we're failing in a much larger way. So then there's going to be some kind of capitulation by institutions where they just want to get rid of their positions, especially momentum institutional traders. Okay, well, with that, let's go to now silver. And when you look at silver, I would urge you to look at different things here. Well, first of all, silver is definitely outperforming gold. Look at this reaction that we had in gold and look at the reaction in silver. Yes, there is some supply signature, but it's nothing of what we have seen before. So supply is definitely going down, and we're creating a higher low instead of a low low. So that's a very positive sign. So it's holding much better. So in a way, it kind of gives us a little bit of a clue as to, like, is it, a trader selling silver or not? And here we're seeing that the silver is not being sold as much as gold. So as long as it holds, somewhere in this area, in this trading range, and tries to kind of like creep up a little bit and then have a momentum up, I would expect, if the rally happens, it would happen to 27, and then we still go into a trading range here. So this is a bullish scenario. For this bullish scenario, I would be looking first at the idea of a much more extended trading range that we have had with the shakeout in phase C, with the major sign of strength that looks so good that it suggests some kind of continuation just based on the momentum alone. But that continuation should come after some consolidation action. So we're still thinking that we're in the back-nap action, and until we actually fail below 2050 or below 19, then we'll be talking about the failure of this pattern. Also, if you would look at the structure, the whole structure, how the price moved down. So we went into the climactic action. We had the first leg down, second leg down, into the lower low. Now we're having higher lows. I'm thinking that we should go to the higher value zone right here and start consolidating here into the demand line and then start going up again. So kind of like this type of, either head and shoulder or cup and handle formation, whatever you want to call this, and look at the potential analog that we could find in 2010 for this type of movement, where we had contextually a rally up, first leg down, second leg down into the lower low, rally into the high of the previous resistance, consolidation, and then resumption of the trend. So I think this is a bullish case scenario. I also think that this could be a bearish case scenario. So first leg down, second leg down into the lower low, and then if we break somewhere here, this is going to show weakness. So we don't want to have that third lower low. That's what we're trying to avoid. So if silver could hold here and instead start rallying like it did here, then we will be in a bullish camp. If we fail, then obviously we could go more into a consolidation, and I would expect more of a consolidation because there was a lot of buying, kind of like this cyclical secular type of buying. All right, well, Franz, let me ask you this question here, coming back to silver. What would be, if we would be anticipating some kind of bear scenario, what kind of price and volume characteristics would you expect?
We would see more volatility.
Okay.
We would see an upturn in the volume signature instead of this, this gradual decline that we're seeing. And we would see a break of support.
Yep.
So basically, that's what I'd be looking for.
Yeah, we want to see that the selling is coming. It's going to be shown to us in the volume signature. We want to see that price starts to break certain levels of support. 1, 2, 3. The trend channel itself tries to rally, and the rally is not that great, and then a continuation to the downside. And again, for us, what's important is to understand how different scenarios could possibly unfold. Why? Because we're practicing our mind to accept different possibilities. When you do that,
important.
Yeah, when you do that, if it happens, if something low probability happens against the kind of like your bias consensus right now, mentally it's really hard to switch. But if you prepare yourself to be more neutral and just to follow one scenario of another, obviously that is going to be much easier to accept. Okay, well, let's look at one more chart, and this is the chart of the gold miners, junior gold miners. So, Franz, we always talk in WMD about the relationship between the miners and the actual metal. So, what is it?
Sure. A beautiful cause that's been built. A big shakeout on COVID, and then just very, very quick recovery. I think this was probably one of the strongest performing groups initially out of COVID. Major sign of strength, overtakes and stays above, you know, the previous peaks in the entire trading range all the way back to 2016, and you know, looks like backing up action. But one of the things that is kind of a rule of thumb for this whole complex is that when the mining companies, the stocks of the mining companies are doing better on a relative basis than the metals, it tends to be you know, more of a bullish sign than when they're underperforming. And at this point, it's really hard to see, you know, which is outperforming. I think they're probably kind of in a horse race here to see which is performing better. But you really do want to see the mining stocks, you know, catch a bid and start moving higher aggressively, either with the underlying metal or, you know, even in advance of it. And I don't think we're seeing that yet.
Yeah, well, the long-term structure is obviously very, very constructive, very bullish, with the sign of strength of the low. We are in the backing up action. There are a lot of questions by students as to, well, why could we not have the backup action that lasts maybe like a day or two? Well, think about the whole formation here. It took more than 3 years to create this structure. And you could even extend it further into 2013 if you would be thinking about gold in general. So therefore, for this type of structures, a backup action might take some time. So we kind of have to wait as to how it might unfold. Yet, we could definitely look at the more short-term price action and start looking into the actual trading range. So for instance, this trading range right here, slightly downsloping, and we would be expecting exactly that. We would be expecting that maybe the price might potentially come to this level where it stopped before, because just the momentum on this rally is somewhat less than the momentum on this one. So we kind of, you know, could come back to the points where momentum started to decrease. This could be also another point of interest to us. Moving average also would be another point of interest to us. Look at the relative strength to the S&P, definitely in the short-term weakness position, making lower lows and lower highs. So what are we waiting for? What would be a good sign for us here? As we're making lower lows, a next higher low would be a positive sign. A next higher high would be a positive sign too. The development of the demand signature, increase of the demand signature, and decrease of the supply signature would also look positive. So if we would have a rally from here, and we don't have to overcome all of the highs, but you know, if we would, after this upthrust attempt, would overcome this level of 60 and then come back into another higher low, this would start creating that sequence of higher highs and higher lows, and that could be interpreted more as a bullish case. So we're just waiting here to see what's going to happen next. Now, on an individual basis, as I go through a lot of gold and silver stocks, those actually look, you know, much more advanced and much more interesting than the group itself. Okay, well, Franz, any last comments, thoughts about today's topic, either on gold, silver, or the miners?
I like the discussion just on this particular chart of the two momentum kind of stages that the miners had on the way up. First of all, you know, strong momentum, and then, you know, a pause, and then, you know, weaker momentum. Still good, but and I just really like using that, thanks to your teaching, as an indication of where we are in the overall, you know, rally phase and trend phase. So that's that's one observation. And following the overall performance of the mining stocks, they were leading a leading group for most of the period from about March through about, I don't know, August, September, and then they've kind of taken a back seat for a while, just as this backing up action kind of consolidation plays out. So waiting for them to move back up again.
All right.
In
Well, sounds good. And as always, guys, don't forget to check out our website. Just want to promote some of the features that we have, educational features. Check out our bias game. Check out all of the free blogs that we have on different topics. Check out our YouTube channel. Check out our Twitter, where we post a lot of the analysis for free. And obviously, if you want to discuss any of your trades, send us an email to wyckoff@gmail.com. Franz, thank you so much, and we'll talk to you guys next week.
Thanks, Ramon.